Are you thinking of buying a home as a first-time home buyer? Are you currently a homeowner? However, it is likely that soon your current house will not meet your needs or the needs of your family in the future. Or worse, you've already outgrown your house or your home has outgrown you. For one that is thinking of buying a home for the first time, for one that is a repeat home buyer that is looking to upgrade, or for one that is a repeat home buyer looking to downsize. Oh, by the way, downsizing does not mean downgrading. This spring is a great time to take action. My name is Kevin Martini. I am a certified mortgage advisor, and this is episode 133 of the Martini Mortgage Podcast that I will be calling the Homebuyer Opportunity this spring. It's always a great time to explore the benefits of home ownership. One can never be too early to explore home ownership options, and one can never be too late to explore home ownership options either. In case you are wondering, it's a great time right now, even in a competitive market like we are in today. If you are a renter, and there is nothing wrong with being a renter, and there is a time to rent. However, that time is not now. Rents are rising, and the only way one can truly escape rising rents is to consider purchasing a home and secure a fixed-rate mortgage to lock in your housing cost. Yes, I get it. Inventory right now is tight and may represent a challenge, but even though the number of homes that are available for sale is low and could represent challenges, the search is worth it. Whatever way you want to look at it, homeownership is not just a stable long-term investment. Homeownership allows you to lock in your housing cost for the long term. I know what you are saying. What about taxes and insurance? Yes, property taxes and homeowners insurance are not fixed costs since they will change from year to year to year, and they may rise, but your pure housing payment, which is the biggest portion of your housing expense, will remain the same with a fixed rate mortgage. It is a fact. Homeownership can create wealth. Wealth is created by appreciation, and wealth is created by retiring of your mortgage. Listen, if you rent today, you are paying a mortgage. Granted, you are not paying your mortgage. You are paying your landlord's mortgage for them. On the topic of wealth creation, last year, the average homeowner gained $56,700 of equity, and renters gained nothing. The pandemic has highlighted that homeownership has not just tangible financial benefits, but intangible benefits too. Homeownership has many perks, but to me, it provides me and my family with security and stability, even in turbulent times like we experienced the last couple of years. Homeownership is not just about dollars and cents. However, the dollars and cents make sense. As a certified mortgage advisor, the hot talking point the families I serve have right now is inflation, mortgage rates, and concerns related to where home values are headed. Let me share what I share with the families I serve. Let me start with mortgage rates. There is no question that today home loan rates are higher than they were last spring, but from a historical perspective, mortgage rates are low, and if I may say, mortgage rates are epic today. For crumb's sakes, when my wife and I purchased our first home, the rate was in the mid-9s. In case you're wondering, experts believe that rates later this year will be higher than they are today. Yes, home loan rates are expected to continue to rise, and when they do, it will cost you and your family more. Essentially, when mortgage rates move upward by 1%, your buying power is reduced by 10%. You just have to accept it. your buddy that purchased a home last year got a lower rate than you will today. It is what it is. And the current mortgage rate environment is still very favorable. Maybe not as favorable as it was, but today it is more favorable than the experts are predicting by the end of the year. Here is the Kevin Martini bottom line. Mortgage rates are expected to continue to rise, and that means in the simplest form, it is going to cost you and your family more to wait to buy a home. If the thought of buying a home this year or maybe next year is beeping on your radar, however you are waiting for rates to drop, you will be waiting in a line that is going nowhere. And current home loan rate environment will be in the rear view mirror, and you will likely say, I wish I took advantage of the mortgage rate environment in the spring of 2022. Let me shift gears and talk about home values. I'm a certified mortgage advisor, and some people call me a mortgage strategist, but no one calls me a real estate agent. Since I'm not in real estate, I need to research what leading real estate experts are saying. I look at CoreLogic, Fannie Mae, Freddie Mac, the Mortgage Bankers Association, the National Association of Realtors, and the Home Price Expectation Survey. Now, not one of these entities believes that home values will be lower in 2022. They are forecasting that home prices will increase in 2022. Granted, home values will likely not increase at the same record levels we have seen in the past, but home prices are not going to retreat. Here is the Kevin Martini bottom line. If you're waiting for home prices to drop because you think homes will be more affordable in a few years, you need to know that there is no data that supports this. If homeownership is right for you and your family, you have a remarkable opportunity to get ahead of the curve by purchasing a home before the cost of that home goes higher and the cost of getting the mortgage goes higher too. Finally, it is sad that some fear the home buyer's opportunity this spring is not existent because of inflation. It seems like today every news article includes the topic of inflation. I understand why. Inflation is a real thing, and you may be concerned about inflation as it relates to the purchasing of a home, and you may think it's better to sit on the sidelines because of inflation. Inflation should not stop you from buying a home. Let me say it again for the people in the back. Inflation should not stop you from buying a home. If anything, it should accelerate your plans. Here is the Kevin Martini breakdown. Home prices have been increasing, and experts forecast home values will climb throughout the years ahead. The only way you can protect yourself from higher housing costs is by locking in an historic fixed rate mortgage rate or a home you buy sooner than later. History has shown the best hedge against inflation is fixed housing costs. Wow, that was a lot of stuff in a short period of time. If you want more information about what you heard, or if you are not sure where to start, let me share this fact. The home buying process starts with the home loan, not with the house. Connecting with a mortgage strategist with the Martini Mortgage Group by calling 919-238-4934. It's never too soon to explore your homeownership options. It's never too late to explore your homeownership options either. If homeownership is right for you and your family, then know this. The first step is always the loan, not the home. There is never a substitute for having price and cost clarity before you start looking for a home. Get pre-approved before your home search, and not just pre-qualified. To a seller, a pre-qualification says you are just ready and willing, whereas a pre-approval with a certified mortgage advisor with a Martini Mortgage Group says you are ready, willing, and able. It also communicates to the seller you are making a same as cash offer. And that is important to share in any market, especially in a tight real estate market like we are in today. If you want trusted advice with a digital mortgage process that offers a great rate with certainty, check out my website by going to www.martinimortgagegroup.com. You can find some real-world information there, and you can also securely apply online or book an appointment with me. My name is Kevin Martini, and thank you for tuning in to episode 133, which has been called The Homebuyer's Opportunity This Spring. Now, it is time for the disclaimer. This material has been prepared for marketing purposes only. This is not a loan commitment or guarantee of any kind. Loan approval and rates are dependent upon borrower's credit, collateral, financial history, and program availability at time of origination. Rates and terms are subject to change without notice. The Martini Mortgage Group at PCL Financial is a division of Celebrity Home Loans, NMLS number 227765, with a branch address of 507 North Blunt Street, Raleigh, North Carolina 27604. You can contact Certified Mortgage Advisor and Producing Branch Manager Kevin Martini, NMLS 143962, by calling the branch, and that number is 919-238-4934. For a full list and more licensing information, visit www.nmlsconsumeraccess.org or by visiting www.martinimortgagegroup.com. Equal Housing Lender.